Hey, good morning, guys. It's Simon with TRADEnPERFORM Coaching. Let's get the trade review going from what happened yesterday. We'll start with looking at the profile, and then we'll work our way backwards to the algos and the support resistance zones and see how everything came together. So, first, looking at profile from NQ. Um, this is the RTH, meaning the US session only. And so you can see this is Friday. This right here is Friday. We had This is Friday where we had our very, very large 3% down day, right? You can see this was the 618 retrace right up here around 25,007. And you can see we've just been pretty much putting in inside day after inside day. One, two, and yesterday was day three of inside. And we finally have worked our way up and above Friday's value area high to re-auction this poorly auctioned area up above, right? And there's two areas that are distinct. So you can see from a TPO, which is a time price TPO perspective, this is all a single print area, but from a volume perspective, if you make this bigger, there's still volume sitting in here. The real TPO and low volume node is sitting back up here at 25,200 to 25,300. It makes sense that we work our way up there if we can, right? Not sure that we will. And then this is a return to the scene of the crime. If you break this chart out right here, and this is where the scene of the crime was, back to 25,359. And my guess is we'll come in and we'll tag that area eventually while we're still in a bull market. If you zoom out, right, and you don't get lost in the noise that everyone's talking about, the market's going to go down. I see a topping process, and they may be right. That's not, I don't look at the market like that. I don't care. I think we've gone into a two-sided market, but from a participant standpoint, this is going back to March, right? And when I look at it from this perspective, there's just no downside. Look, that's March of 24, right? Excuse me, this is going back March, April, May, June, and then we're all the way over here to October, right? And that's just not a bearish chart. You can just see the line going straight up, right? Like there's nothing bearish there for me. And I've learned a couple of things. Shorting is easier in two environments, and going long is easier in two environments. I think high volatility over low volatility, it's very difficult when we just get this straight grind up like we had last month. Very, very difficult or harder for me to trade. This is where newer traders have an easy time because they just go long and it keeps going up. For me, where I make most of my money is when the market starts doing this stuff, when we start having two-sided markets. And we started having two-sided markets really back over here, I would say on 10-7, where we started rolling up and down quite easily, up and down. So both sides are working, right? So when I look at the larger picture of what would make me, if you go, well, what would needs to happen to get bearish? Well, the first thing is we'd have to take out the low from Friday. We haven't done that yet, right? Secondly, if we take out the low, right? So imagine what will happen when we take out the low. Everyone who went long down here, right, and over here has their stops just underneath. So see how the prior swing low was right over here at 24,445, roughly, 24,400, let's call it. So you can see when we get right over here, we come just underneath that 24,400 to 24,350. We trap late sellers, trap back in, and then what do? We shot back to the 62 retrace, which is 25,000, right? Which is effectively where we're trading right at this moment, right? So the first thing would be we have to break down. So a couple of things had to happen. First of all, we needed a clean close underneath the prior day low, and we got that, right? We closed at the low. And now what I would say is we need to hold underneath this low. To give you perspective on that, right? To give you perspective on that, what I would have said before, right, is if we were going to roll down over here, this is where we were trading, I'd say the first thing I need to see would be a close below the prior day's low. You get that here, right? See that? Here's the prior day's close. Here's the next day's close, but it's above prior day's low. And then finally on this day, on 9/24, we close below. So then I would say, what has to happen next? Well, there was a bullish gap away right over here. We filled the gap and then some. And then we trapped back on the gap and we ran back up. And we started the process over. You can see here we closed above the prior day's high, and that launched the move back to the upside. And you can see from these moves, we only had one day that closed below, and it couldn't close both below the prior day's low and the swing, right? So here you had this prior day's low, it broke, you got the pushes down. Here you had this extreme long liquidation, right? I'll grant you it was a big long liquidation, right? Almost 1,000 points, but it didn't go anywhere, right? Meaning you didn't break your last swing. Here's your swing, here's your swing. If you go back a little bit further, and I like to keep things pretty simple, right? So for me, I need to break and hold below this 24,416, and then what I need to see is not closing back in. But here's the trick with the market. If you go back to any point in this market here, I'm just going to zoom back here, right, to another time and place here. See how we're going down here? This is in March. We're going down, we're going down, we're going down. I'm going to say the opposite here, right? I want a clean close above a prior day's high. I want to break a swing. So here's where the first place I'm going to go, well, this was constructive. We closed at the low, gapped above, and I'm going to say, look, I can see that there's structure here, right? I can see that this is, I'm going to say right between 19,937 and 19,800, right, is going to act as support. And then I would say, well, if that structure stays constructive and we can hold this consolidation, and then we can break above, meaning I want an impulse move above to come back and re-auction areas above. I'm basically going to say the opposite here of what I'm saying right now, which is I need to see a clean break and an impulse move higher, right? So as you follow this chart, see that long consolidation? Look at that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's distinctive. It's clearly flat. You can see that they push down below, and all of a sudden you see the daily closes, right? This was the lowest daily close, and they just couldn't get back down there to test it, right? See how value shifted down and all the value went sideways? 1, 2, 3 days where value was all in the same, pretty much the same area, right? And then you look above and you go, well, look at all these naked volume points of control above that need to be auctioned. So what would have I said? I would have said, here's your consolidation, here's your breakaway. And you got to remember, this is right before we actually had a pretty big downside move, right? And now, as you look to the right, I would have gone and said, okay, this is bullish, right? And we are not bearish until we, not only do we fill this gap, right? If we were absolutely bullish, we would fill this gap. See how they came right to that gap and tried to hold it? And when we lost it, what I'm trying to explain to y'all is, when we lost this gap, it's because what everyone was expecting was this. See how you have an open gap right here? And we came back and we tested that open gap, then we closed back above it. What you would have expected over here, right, is you've gone, oh, that's a bullish gap away, right? And if we fill the gap, we should have a response right there, right at 2,400. We came back to the 2,400, they closed above, the next day it opened, and they long liquidated. So now I have a bit of market information. Watch, I'm going to do this. I'll show you all how to read this. That became a very important part right there. Why? Because we broke out, we came back and tested it. So when we break back up to the upside, I should regain 2,431 and hold it. That's how it should work. I'm trying to explain how I look at the market. So see how we came back and we tested 2,431, we couldn't get back above it. It rejected and it rolled back through. You're looking for specific local information. That's what that is, right? You can see that we broke the swing, came back and backside tested the critical area and continued lower. Now I know 2,431 is very, very critical. Now I'm watching the next couple of days. And as you can see, we're still continuing lower. This is in early April when we got very violent, right? And now I'm going to say, oh, 4 days sideways, right? You know what I want to see? I want to see a gap away from this point right here. up, right? So as we continue through this consolidation, it was a very volatile month. Okay, so I want to show you two things. Bullish gap away here. I would now expect if we're going to go higher, this gap right here is going to hold. 18,872. I don't want to see back below that if I'm a longer term trader, and I need to get above 24.31. So here's where we attempt above, and I need to close above that 24.31. Okay, see how they finally closed above and we started working? So look how that worked. Bullish gap away, right? We work our way up to the top of the range into these naked volume points of control. Here's where we finally close above, right? There's another bullish gap away right here. Here's the gap fill on that bullish gap away. Is right here, roughly. We fill that gap. So see how we got above, right? They held. They came back to fill the gap. So you got additional information on this day from that bullish gap away. And you had another bullish gap away right here that never got filled. That's a very important piece of information. So we learned something from that. The bullish gap aways hold when they're really bullish, right? Particularly the first one holds and doesn't get retested, right? Then we come back up. You can see the sideways compression through here. Now we have another bullish gap away. Now, right, for my ultimate bullish position, I don't want to see a close back below 25.90. That is not 2600. Does not mean the market cannot close back below that. It means that's what I want to see. So we push, we push, we push. We should attempt to come back in, and you can see from there, we just never do. We just keep it trucking. That's what the bottom looks like. Go back and map it for yourself. That's what the bottom looked like. Now come back over here. Come back to the end, use the same logic since the market repeats. Come back over here. You had a bearish gap away, right? Except it wasn't a gap down. It traded down through it, making this the scene of the crime. 23,561. We then had a bullish gap away within range, right? So this gapped up. This is what we've done. Not what I'm thinking about, not what I'm guessing, is what we've done. We rolled down, we tested to the bottom of the range, just below the bottom of the range, right? Just below the bottom of the range. And now we've come back up, we had a gap away, we've tested that inside market bullish gap away, right? And now we've come back up, and now we're consolidating from here. So what would I like to see? I would like to see a gap. I already know what my good bullish gap aways look like. They look like this. See how there's a space in between the high and the low? They don't get filled. I'd like to see a bullish gap away up here. I don't know that I'll get it, but that is what I'd like to see. And then I want it to hold. So my guess is somehow, some way, we'll work our way back down to retest this low. That's a guess. See that? That's not a market position. That is not me shorting and targeting this. That is a guess. We will get down here, then we will have another bullish gap away that does not get filled, and that will start the run back to the upside. Or we'll slowly grind our way all the way up here. We'll get a bullish gap away that either gets tested. If it doesn't get tested, that's extremely bullish. If it does get tested and holds, and that'll start our next leg to the upside. That's how I view the market right now, right? In the meantime, we're trading within this entire range, right? We're filling in volume from the low volume areas. We're filling more volume in here, and we still need to come up and repair this part of the chart up here, and we have not done so yet. Maybe we'll do it today, maybe not. I don't have to figure all of that out. My job is to trade and make profits. But I do understand that I'm going to need to be below this large consolidation area and have a bearish gap away that doesn't get filled, and it will look much like it'll look like this. This one came back and tested, but it'll look pretty darn close to that, right? We had a high, we had sideways consolidation, you broke to the downside, you have a clear visible gap down and a close below the low. This one backside tested in this particular case, and that started the roll to the downside. And it'll look something like that, but you'll see here, see how there's a base? And see in this case how we came down to test that base and we closed below? We haven't accomplished that yet. That's what that picture looks like. Here's what this current picture looks like. So that's pretty easy and straightforward. So now let's go forward to, let's go and set up look at how the levels worked from yesterday. Okay, so I'm going to go to my trusty, actually what I'm going to do is do this in two parts so people can, no, I'll just do it in one part. I don't care. Let's roll. So first, these were the zones that we ended up with. I'll show you from the 40 tick since we had a pretty wide ranging day. Here's the open at 8:30 in the morning. Right, you can see, so this is the way the market went down. I'm going to use the 8:30 levels. I forget why I had 25,123 marked off up there. I'll go back and figure it out, but it's marked off, right? So let me make sure it's not on this chart itself. There we go. So I had it marked off. So this is how it worked. We came from 5 in the morning. We were in support. That was a inside day value area high is that gray dotted line. The yellow line was Friday's value area high. That needed to be tested, got tested, came down, rejected, came back down into support. The purple areas, they were all purple instead of green. Why? Because they were all inside a prior day's level, right? And so they're not as solid as when they're outside of the prior day's inside day. But just how I do the charts, it makes them stronger, right? So then you come up, came through, we tested a little bit underneath, found they tried to break the support level, found responsive buyers, pushed up into the next resistance level. We drove through straight through, came up into the 25,123. I forget why I have that marked off, but I did. Found rejection with the green bar, rolled back down again. These are weaker areas, so we sliced through all of this, right? Back below Friday's, yesterday was Wednesday, Tuesday's value area high, right? Tested back in, came back up to attempt to test into the 100 in the VWAP and the value area high, and then rolled back down into support. So I'm going to go through and break this down in more detail in just a moment. So then as you come over, responsive buyers in here, back to resistance, 50-60 retrace or 382 retrace, and then they're going to attempt to make a move back up here. Let me tell you something. This is why day trading is hard. See how I could say, oh, we found support. We're going to go test this and this next. And it's a non-circuitous route to get up to that area, right? You don't know how the market's going to travel to get from point A to point B. I can say this is short from here, and I don't know if this is going to respond from here. I don't know if it's going to respond from here. I know that's the area where if there is a response, I will get the response from that area, and that's where the algos come into play, and that's how we closed out the day. And then you can see where we are right now overnight. We've come into resistance, chop, 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 and pushed, although we'll have to readjust the areas. If you want to see what that looks like without the moving averages, that's very, very easy here. Hide, hide, hide. Okay. And that got rid of almost all. This is a VWAP left, right? And if I erase all these lines, that's what the day looked like without any moving averages on there, right? So pretty straightforward. The moving averages are a wind vane for me. They help me tell which way the market's going to move, okay? So that's how those levels broke down. And what's most important to me is I know where not to trade, right? I know that this can get completely swept. I know that this can get completely swept. You may discount it, but that for me, that's in that area. I know I needed either extremely strong algo or a 50-60 retrace or some reason to want to trade in that area, because otherwise I know from 24,920 all the way down to 24,750, let's call it, which is almost 200 points, 170 points of me not having to make any decisions or getting bone crushed short or long, right? So very, very important. Okay, so now let's go look at the level that I actually trade, and the algos that I trade. And then hopefully that'll all come together for us, right? So when you look at this chart, levels on here, and we don't, because I was doing a coaching session, so I need 5, 8, and 9. Chart settings, 9, 5. Okay. There's my levels. Okay. So now I want to get to the decision making time. Okay. This is very, very important. How do you make good decisions when you are trading, right? So support resistance levels are not enough by themselves. Okay. What you need, I'm going to say this again. What you need are the algos to help guide you, right? So there's probably 4 ways you can trade. You can trade in support, right? You can wait till you have all your algos above the VWAP and the moving averages, right? Or you can trade 50-60 retraces, or just trade pure algo all by itself and not care about where support and resistance are. Okay, all of that is valued. I'm going to show you what I said yesterday you should focus on, and we're going to look at that first. So first, I want to look at the square trades and how they worked and distinguish those. So what I'll do is I'll do that in the next recording so that you can see easier, because this one's dragging on to 22 minutes. So on the next one, I'll just go and do a